Curtis with the Bartos Group of Premier Plus Realty, and my cohort, whatever word you want to give to this woman, Cheryl Stokes from New American Funding. And it's January, so Cheryl, what are we doing?
We're doing our housing update, and it's 2021, first one of the year.
2021. Welcome. We have a lot to cover, and, we'll just kind of get to it. Cheryl, while I'm pulling up the screens, talk about what you're seeing.
I am seeing no stop to the volume of business that we saw from June through December of last year. It's continuing as it has. And I'm not seeing, other than a couple of days where we've had a little bit of volatility, I'm not seeing any change to the interest rates, which are still historically low.
Yeah, well said. And we are going to get to what's happening in our market in a hot minute. But, without further ado, let's see if I can make this all work because, technology is our friend, right, Cheryl?
Not my friend, but okay.
So we thought we'd shake it up a little bit this month and see what's on people's mind. Now, if you have a question, remember down below, you can add your question and we'll address it. We do have a lot of slides to get through. But Cheryl, these are the three questions that we're hearing. I heard the housing market is going to crash. I don't want to buy at the top of the market. And they're kind of, one to the other. And then this third one, the change in the political party will affect the housing market. So Cheryl, those three kind of summarize what you're hearing right now?
It is. And those have been kind of the conversations for maybe the last 45 days or so. Mm-hmm. I think we can assure them today that these are not things that they need to worry about.
Well said. So let's kind of get into it, what the analysts are saying. And, one of the things I love and, of the analysts that we're listening to, Keeping Current Matters, who you can see below the side, whatever it is who this chart is who I listen to. And they pull a lot of the larger analysts together. And, that question of when is the economy going to recover? Well, with that question, quite honestly, we look back and April 6th, Cheryl, we had a lot of things we were doing back in April of 2020. Yep. And the analysts had these predictions that it was going to shoot down like a check mark or a swoosh or whatever you want to call it, and then go straight back up. And that top slide is what the analysts were saying. And in fact, this slide is from, I think it's from the end of third quarter. It was a December talk that I was listening to. This is what actually happened last year. And wow. So our analysts have been spot on, right? I mean, would you agree with that, Cheryl?
Absolutely. I mean, they've all been within a few percentage points of each other, I think.
Yeah, without a doubt. Now, the question is does a recession equal a housing crisis? That's a question. This one says, does it not? Right? And so
exactly.
To that end, look at we did this back in August of 2019. So this was before we even had thought of a pandemic.
Right.
And we were talking about it because we were thinking the housing market was going to slow down a little bit at that point. And if you look at the last 5 recessions, the big one that came in like 2008 had a huge reduction.
Yes, it was a huge effect on the housing market for sure. But it was all housing market.
Yeah, it was housing market, and it was caused primarily because people were overextending, and we've fixed a lot of those different things. But out of those 5, 3 we've had an increase. So let's fast forward that to this most recent one we had. Cheryl, look at this with the whole 2020. What's happening there?
We're having an increase, just like those 3 previous recessions that you forget about when you're in the midst of it. You don't really know what's going on and you remember the worst one. But in actuality, we're not there.
And so that question that begs, is this the same as, 2008, 9? I don't want to buy at the top of the market. Well, right now, no one's buying at the top of the market. We are literally in an increasing market. Cheryl, are you seeing that as well?
I am. And we're not seeing that negative number. We're not seeing a fall in pricing. We're not seeing people losing their homes. We're not seeing any of those indicators that you would have seen in 2008.
Well, and to that, extent, Cheryl, if you start thinking about where that comes, these are real people with real money that are buying now, which in the case of 2008, they were flipping, they were closing, they were putting another offer on another property before they even closed this one. And it was just this domino effect that went free fall. Well, and then look at what happened. That initial forecast here that we're looking, because forbearance is what happened there, right?
Right.
With a ton of things that went into forbearance. If you look at what's happening now, the initial forecast in the summer of 2020 said that it was going to be 30%. When in
nowhere near that.
Right. When in actuality, our peak was at 8.6, and currently we're at 5.5% forbearance.
And I think it's actually a little lower. I listened to a report yesterday that said it's down another 0.3%. So that is decreasing on a daily basis.
Yeah. Yeah. And this next slide to me is really interesting as well. Is that if you look, Cheryl, at the people that are still, here in forbearance, right?
Yep.
But they've extended it versus the ones that came out of it or paid off their mortgage.
Correct.
Of the almost 5 million families that were granted in forbearance, it's not horrible.
It's not. I think we're way ahead of expectations. I think there's enough bounce back that people, either they've paid it back and just gone through the motion and continued forward with their current home, or they refinanced and did not have to go through the forbearance process. There's been a lot more opportunity to deal with the current situation than there was in 2008.
That's an interesting thought. In 2008, I'm asking you out of the blue. So if you don't know, it's okay. But do you remember what the interest rates were back then?
I don't know. I have that somewhere. I think it was somewhere around in the 7s, honestly. But don't hold me to that number, but pretty close. And, interest rates have been in the 3s all year.
Right.
So the opportunity, if you had even a loan that you closed in 2019 or 2018 that might have been in the 4s, you had the opportunity to refinance, lower your payment, and not have to look at forbearance. You had another methodology to get through the process.
Yeah. Yeah. Hey, we have a question. I'm going to put on my glasses to read the question. Do you predict that this will continue on into the fall and winter? I'm going to say, when she says predict, that was just a minute ago, interest rates.
What we're seeing right now, the current predictions are that they are going to maybe slightly increase, but no expectations of them being higher than 3.3% at this point. Obviously, we don't know the future for sure, but there's no indicator to expect it to change from there at all. Something to understand about loan performance right now, a report came out yesterday, late payments on loans, 90-day lates are down to 4.1%. 60-day lates are down, 30-day lates are down. So there's nothing to indicate that the market is going to change as far as how we are situated with current home ownership. There's nothing to indicate that we're going to change in rates. So I predict, along with some other people, that at least through June we're going to be in the same situation. At that point, then we have to revisit it.
Well, and that's a pretty good, indicators of what you're looking at, honestly, right? And some of the housing analysts are saying third quarter, fourth quarter of 2020 are going to be even bigger than the first and second quarter of this year. We're seeing some crazy positive things happening right now in the market, because we are in a second home, Florida, people coming here. But, third and fourth quarter is what the analysts are saying. It's like,
I think if things continue for sure, and even here locally in our market of people who work and live here every day and they're not seasonal, Rent overall nationally is increasing 2.3%. So the notion that maybe it's the time to buy your first home, even here, people who live and work here, I think they're pretty incentivized to do that. A 3-bedroom apartment is typically more expensive than a 3-bedroom home, and that's true for 63% of the country.
That's amazing. I mean, you're throwing their money out the window or into the water, or whatever you want to say.
Well, you're paying someone else's mortgage. That's what they say.
Exactly. I love that. Well, this question, the question is, hey, I don't want to buy at the top. Am I, are we going to see a free fall? Is that going to happen in 28 all over again? That therein lies a good question. Here's what the chief economist at First American said. Many still bear the scars from the Great Recession, 2008-9, right? And may expect the housing market to follow as a similar trajectory in response to the coronavirus outbreak. But, a big but, double, triple underline, there are distinct differences that indicate the housing market may follow a much different path. While housing led to the recession in 2008 and 2009, this time it may be poised to bring us out of it. What do you think?
I completely agree with that. If you think about how large the real estate market was and how busy we were through 2020, I think it's one of the things that's helping the current economy, because all of those loan closings support many, many other businesses, and it's continuing to help the economy. And we have more ownership in our homes now. On average, we have more equity in homes than we did in 2008.
Well, and this was from March, and quite clearly, when the world was on fire and everything was happening in April and May, and let's face it, we're still in COVID. Coronavirus is still around. We haven't gotten the vaccine. We're still living in masks, etc. But what we truly have seen is that the housing market has pulled this up. I mean, the housing market is almost like it had a little fire and somebody put gasoline on it and it blew up, right?
Yeah.
Crazy. So that's what Mark Fleming said in March. Well, this is recent. Cheryl, you want to read this one?
Sure. Nearly 2/3 of borrowers who exited forbearance remained current on their payments, repaid their forborne payments, or moved into a payment deferral plan, meaning they moved that to the end of their loan. All of these borrowers have been able to resume or continue their pre-pandemic monthly payments. And that's what I'm talking about. The forbearance percentages are continuing to trend downward.
Yeah. I heard a number, which I thought was interesting. In a regular market, 206,000 loans go into forbearance every quarter, right? So, and then the stuff that's still in there. So, there is forbearance in a standard market, let alone in this craziness that we've
Right. It's not just due to the pandemic. Correct.
Absolutely. Absolutely. So, is this a crazy busy slide, right? Cheryl, we've had a lot of months of data that we've been putting out there, buyer's market versus the seller's market with months of, inventory. We've got, the 6 years leading up to the housing crash versus the last 6 years. I mean, you start to look at this and, it's exhausting at the slide. I debated on whether I should put it in, quite honestly, Cheryl, or not, because it is so busy. But I love that, then versus now, 2005, 6, 7, the home equity cashed out. Look at how much money was in that in those 3 years, $824 billion. And look at what's in 17, 18, and 19, $247 billion. So when you look at these two columns and what happened in these, average price appreciation versus now, buyer's market versus seller market, and then 58% of all homes in America, you talked about this, Cheryl, have less than 60, at least 60% equity. Wow.
And that's what's helping the housing market, and that's what's preventing it from being 2008. And just to talk about the months of inventory homes for sale, I heard a presentation today that there are less than 700,000 homes nationwide for sale right now. Nationwide.
Yeah.
I mean, it is low inventory everywhere you go.
Right. So you can't buy if you can't, if there's nothing to buy, you can't sell or, get your second thing. I mean, inventory is what our constraint is right now. And in, economics, basic economics, they teach us, in like first year of college, high demand, low inventory. What does that do to our prices?
It increases your prices, and those prices are continuing to increase, but interestingly, not so much that they are unaffordable. We have to remember that as these prices have increased over the last year, the interest rates have decreased. And that decrease has been enough that it is still allowing buyers to afford more home, even though the prices have increased.
I love that. If you thought you couldn't afford something, well, then you need to talk to Cheryl to see.
You might be surprised.
Right. Yeah, that's exactly what. Well, we answered some of those questions. What we didn't answer in that first segment, Cheryl, was political. What happens when we change? Is this new political power going to make differences? People are asking us those. You want to step into that, Cheryl, or we still want to pull back away?
I'm not going to step into the politics of it, but I will step into the economics of it. And, you have to continue to say that there's nothing in the economic indicators that purport a future change at this time. So, and it's all about the economics for us.
Yeah, regardless of who's in power.
Correct.
So let's kind of go down what's happening in our area. You've seen this slide from us before. These are the major markets, major minor markets in Southwest Florida: Bonita, Estero, Fort Myers, Marco Island, and Naples. Look at those numbers of increase in the last year. Wow.
It's tremendous.
Right? Tremendous. And quite honestly, and let's face it, some of these can swing. Like a smaller market like Marco Island, if we have several large sales, can shift this a little bit. But, in general, if we look at the average, what are we looking at? Somewhere around 15%, maybe?
I think if you put all those together, you'd be there 15, 16%.
Yeah. So that's what's happening, per se in this market of, on the price. Cheryl, how many properties did you say was for sale in the whole U.S.? 77,000?
700,000 in the whole U.S.
700,000. Well, guess what? We only have about 3,000 here.
That's crazy.
It is crazy. I just kind of shake my head with that whole thing because, at the end of the day, you can't move if you don't have something to buy, right?
Correct.
So that is the constraint right now. We are in a historic seller's market. You've seen these slides before from this perspective. Let's see if I can get there, Cheryl. This fade up. We've talked about historic interest rates, low inventory, and according to a lot of newspapers, I don't know where they get this number, but 950 people moving a day to Florida causes that trifecta of a historic seller's market. I submit the boomers that have put their plans off. Cheryl, I heard an interesting story today. I was at lunch with Hannah, my sales associate, and her boyfriend's grandfather, I'm not sure how old he is, but he's in his 80s and he's been poor of health, went in today or last week to get his vaccine.
Okay.
While he's sitting waiting for his vaccine, guess what he was doing? He's shopping on his phone. His grandson doesn't know what's happening. He goes, I'd like to go by the dealership and, just can we take a run by there when we get done with this? And he said, yeah, sure. Guess what he walks home with, Cheryl?
Apparently a new car.
A new car, a convertible. And he said, COVID's not going to get me, and why stop living? And boy, that was profound to me as I heard it today. I'm like, oh my goodness, shouldn't we all have that attitude every day? I mean, whether it comes or not, we get one day, one life to live. And if this is a dream that you have to move, then you should move. You shouldn't wait. Something outside of our world shouldn't cause you to not. So what do sellers have on their mind? Where do we go? We have low inventory. What about appraisals? I kind of threw that one in for the sneaky side. And, the last one, which is kind of true, concerns with people coming in my home. Right?
I think that's still a concern. Really, in a lot of places, we're still 100% mask. So I think it's valid concern for sellers to want to make sure that all the proper precautions are continually made until we get to that point where enough people have had the vaccine or the count in your specific area is low enough. I think that's a valid concern, but we've been able to address it throughout the entire year. So I think that we can continue to address that. From my perspective, appraisals have pretty much caught up. They were running kind of behind through late summer, early fall, but they've caught up to us now. So I think we're in good shape there. You have to speak about the inventory.
Yeah, so that I want to go back to that appraisal thing for just a minute. Cheryl, we're in a market that you said was seeing 15% increases. Are you seeing, in April, we were, maybe not April, was June maybe. I get that they all blended together. We started to see appraisals coming in low.
Correct.
What are you seeing now? They're caught up and they're able to get in, but are they low? Are they taking into?
I personally haven't had any low appraisals since the end of June. I think there are a few that are still out there, depending on the area. But the problem that we had when we had a rush up in pricing is that there were not comps to compare to. So there wasn't a justification for the increase in price. Now, 6 months back, those comps are there. So I don't think you're going to see as big a problem with that because the appraisal amounts and the comps have caught up to each other.
Yeah.
But I think in some pockets, you're still going to have that issue, where maybe it's just not an area that hasn't had a lot of sales in the last 6 months. So it's going to be really hard to justify the price.
Well, and to that end, here at the Bartos Group, I'm going to touch on these things of what, we and/or a good agent would do on your behalf. One, concerns with people in your home. Let's put up a sign. Let's make sure that it says masks are appropriate, required in this home, booties, hand sanitizer. What do we need to do if there's a concern? Let's track it. Agents should walk in with masks, but they get comfortable and complacent, and they don't always. Secondly, to that end, if it's, you do want to sell it, we can still do virtual. If we can get in and take the photos, we can still do 3D walkthroughs and all those things. And then, make those face-to-face visits less. Appraisals, what we do on our side of the fence is we're talking to the appraiser. We want to make sure he or she's from the area, that they've, done a good number of them, that we meet them, we give them the comps so that they have them. And then because once you get a bad appraisal, it's really hard to fight, Cheryl, right? I mean,
yes.
So there's ways to do it, but Cheryl, you and I've never had one overturned. I just that they can say, oh yeah, but it doesn't really happen. So we want
and to give the appraisers their due. I mean, they're like all of us. They have their licenses, their criteria, everything that they're supposed to go through, and their reports should be, and I believe are created around those criteria. So in some cases, even though they understand what you're saying, their hands are tied as well.
Yeah. Yeah. And they're moving fast. Let's face it. We are breaking everything we know. Your underwriting systems, you're doing a great job, but in many lenders, they're broken. Our closing agents, they're broken. Our title company, they just can't keep up with the volume of business around the country that they have, right?
Correct.
Last but not least, where do we go? Where do we move? There's low inventory. Well, there's two sides to that story. Does the domino of selling your home have to happen first? If so, then let's get it sold. And then we can come up with some creative ways to either keep you in the house or get you into a rental or something so that you can then buy. If you don't, then find that perfect home. We'll look for you. And then when you've got it, then we'll sell your home. So there's some ways to do it. Of course, we look for off-market properties as well. That's what we do in those situations. But I will tell you, Cheryl, my question, is it time to move? Well, I don't know. Your thoughts, tell us about it.
I mean, obviously it's situational, but I think if you are in the mind that you need to move, you need to downsize, you need to upsize, you need to go into your first home and start building that family wealth through home ownership, you're not going to have the interest rates at historic lows forever. And again, even though the prices are going up and it is a seller's market, it's still more affordable to buy a home because the rates are so low. We have to keep remembering that what you had in your mind is that you can afford. That has changed. And in some cases, because of the lower rates, even with a higher price point, you're still paying less than you would have a year ago for a home. So if you have it in your mind that you need to make a change, it's worth investigating.
Without a doubt. First step, talk to Cheryl. Unless you're going to pay cash, 40% or so of our clients do pay cash in Southwest Florida. But if you're going to get a mortgage, call her. Her information will be below, or talk to your lender of choice, whatever that looks like. But I will tell you, from a standpoint of, that affordability, there is never going to be a better time. And if the analysts are right, and particularly in this market with Southwest Florida, with people wanting to get here, remember, we're safe. We're outside, 365 days a year. I mean, the AC may keep you in a little bit, but you get to be out in fresh air. We're not as constrained by a cold winter that our friends up north are. We are going to be fighting this for a little bit longer. Unfortunately, the news is all over the place, but home has become more valuable than ever before. Cheryl, would you agree with that?
I would definitely agree with that. And I think the other thing that we've said several times in our reports, and I still believe to be true, is that the way we use our homes has changed. The ability for us to work from home and therefore work from anywhere has changed. And again, you now have the opportunity to maybe move to a different state, still work from home for the same company, and change your lifestyle completely. So I just think there's a lot more opportunity as we rethink how we're going to move forward through the rest of the pandemic, and how we're going to come out on the other end in the way we work and use our home.
Without a doubt. So if you're thinking about selling, there'll be a link below that gets you to a valuation, free valuation site that you can see what the evaluations are. We are happy to come in and give you a free one face-to-face, or you take some photos or whatever you're comfortable with. From a standpoint of knowing what you can afford, Cheryl, how do they get, what does that look like? They give you a ring up and you'll help them through that process?
Absolutely. They can give me a phone call. I will, briefly on the phone, go through kind of where they are in their life and their finances and give them some options. And then they can apply online. They can apply in person. They can send me all their documents and I'll create the application for them and go through it with them. But I can give them an analysis of what they can and can't do, what their options are, so that they can move forward.
That's awesome. Well, another episode of our housing update here in Southwest Florida. I'm Mary Bartos with the Bartos Group of Premier Plus Realty, and my cohort, person in crime, Cheryl Stokes from New American Funding. Until next month, we wish you well and stay healthy.
Happy New Year.
Happy New Year.